Live from New York, coming up, Yellen telling Bloomberg, "I don't see a recession," as the Fed goes quiet before next week's decision, and the dollar is on its worst streak of the year. We begin with the big issue, embracing a soft landing.
You cannot get in the way right now of the soft landing narrative.
We see a soft landing.
Soft landing.
Soft landing.
The consensus view is for a soft landing.
The economy itself is strong and robust.
The data we've gotten recently,
better jobs numbers, better CPI, better PPI, better earnings.
It's all been about a soft landing narrative.
It gives the Fed a little bit more leeway.
We are definitely in a good window for inflation data.
Over-tightening risk by the Fed has been removed.
There's nothing automatic about a recession.
I just don't think you're going to get a pullback.
We are, shall we say, cautiously optimistic.
The odds of a soft landing continue to increase.
Still think it's going to be tough for the Fed to achieve it.
There's just no room for error.
He could be the wizard of the economy in Wall Street if he can truly soft land.
And now for something completely different.
Yes, the soft landing narrative, everybody. So the soft landing, what is a soft landing? I know, some people don't know. A soft landing is the avoidance of a recession. So this is where this comes into play, okay? You have to understand market data and market statistics. And I'm tying this together with some of the comments that I get on YouTube, guys, because so many people comment and say things like, haven't watched your channel in a couple weeks, but man, you're so bullish now. Or haven't watched your channel in a couple weeks, bro, but you're too bearish for me. So what I do, guys, is trade. This is a trading channel. My personal investing was taken out of the market back in the end of 2021. And then obviously a subsequent year, 2022, Bitcoin fell 75+%, NASDAQ down over 35%, S&P down over 26%. And now we are in a bear market rally. So for those of you that don't watch all the videos, my core macro thesis has not changed. And I'm tying this to the soft landing narrative for this reason. How many times has the Fed engineered a soft landing with these economic conditions in market history going back to World War II? The answer is 0. How many times has the market bottomed ahead of a recession going back to World War II with these economic conditions? The leading economic indicators flashing red for recession, the yield curve inversion again at a 40-year high. The answer is also 0. 0 bottoms in the market before a recession. So the big question, and this is where your own personal view will come into play. So for the people that comment, the bottom's in, bro, you missed it. The big question is, do you think we're going to get a recession? Before you answer that with your crayons, let me respond and say this. The Fed itself is forecasting a recession for Q3, Q4. They don't talk about that on TV when you're watching CNBC or Bloomberg, but the Fed is forecasting a recession. All the economic indicators, which have 100% accuracy, tell you you're getting a recession. The question is, for me, not if we're getting a recession, it's when we're getting a recession. If you want to go by if, as far as probabilities, 97% chance we are getting a recession. So if you're in that camp where you believe this will be the first time ever that the Fed has a soft landing, which is the avoidance of a recession, which again, statistically is a 3% chance. If you're in that camp, then by all means, you have all the reason in the world to be bullish. If you're in the camp that history repeats itself over and over again, such as myself and many other economists and traders, then you would understand this is a rally and a bear market. Rallies can go on for a long time. 1970s, 268+% rallies, 6 rallies over 20% in the dot-com bubble. If you're in that camp, my camp, then you know that you just trade because the bottom has never been put in ahead of a recession. So that should answer all those questions. I can't go over my macro view every video because the people that watch all these videos, they're probably tired of hearing it, but my macro view hasn't changed. Trading longs, trading shorts, we're going to cover that in these assets. Let's jump into it. All right, so the VIX, guys. The VIX is at 13.55. Trying to put a base in here, still below its 50. This is a lot of complacency in the market. Still waiting that Minsky moment. We are in earnings season. Lots of people want to see how the Magnificent Seven, they're calling them, which is actually a good movie, but it's horrible to use it for the market. But the Magnificent Seven, what their earnings will be, Tesla may be pretty strong because they beat deliveries and they finally produced their first Cybertruck. I've been on a waiting list since 2019 for a Cybertruck. So we'll see how that plays out if they actually produce the model that I want. The DXY, massive sell-off, guys. We've been talking about this on the channel, the double top. You actually had a second double top here before the breakdown, and you fell all the way to 99.90. Okay, and I have the 618 down here at 99.178. Wouldn't be surprised if you come back down to tag this at some point. But the dollar being weak, typically good for crypto, typically good for risk assets, and also look at the euro dollar. This is really interesting to me because the European economy, especially Germany, which is actually in a recession, both statistically and it's acknowledged that it's in a recession. It's amazing. And Germany it's the third largest economy in the world by itself. With the Eurozone, it's the second largest economy, the Eurozone in general. But the Euro's being very strong against the dollar, which is really interesting because Europe overall and a lot of the key metrics is weaker than the US. But you've had this nice move up. So where's this going? Well, I've been patiently waiting. And I have my resistance. Boom, we hit it. 1.1244. This is where we got to on the euro dollar. I'm waiting to see. This is a daily time frame. Obviously, you change this. You start looking at 4 hours. You start looking at 1 hour. You start looking at 15 minutes. You can start to see when patterns are shaping up here. And I'm waiting for a trade here on the euro dollar. And I want to see if the DXY can hold support and try to get a little bit more momentum back to the upside and weaken this thing because this could be a really nice trade. And if it breaks out and breaks above 1.12449, that could be a potential breakout trade. But right now we're just stacking candles. You can see this quite clearly. We're literally just stacking candles. Your Wyckoff ceiling is essentially the 1618 at 12.449. And then you have your base down here that you've kissed, and you're just kind of in the middle range here. So I want to see this form. You got a little bit of a double top that broke here, got bought back up. 4 hours, there's not enough candles yet for me. And if I want to go down to the 1 hour, there's still nothing that I'm really interested in seeing here. It's just a lot of wave motion up and down. No clear pattern for me has been presented yet. And this all ties back to our larger macro pattern on the daily, okay? The daily. And so I can also look at this with a triangle, get my X, my A, and my D point here. And this came up, this went past the 1272 in a harmonic expansion here to the 1618 at 1.1244. So it's overshot a little bit. It came back down, got rejected. So I want to see what it does here in this range. If it starts to fail in this range, I'm going to look to trade this. If it starts to look to build a base, get that Wyckoff, get the Livermore pivot on the upside of the 1618, then I'll look to maybe potentially trade it long if the dollar continues to show weakness. Looking at the S&P, guys, daily time frame, had our pivot, had our nice short here in our room. By the way, guys, if you want to trade these markets with us, check out our Discord. You can come join for free for the first month. If you want to try out either BingX for all the cryptos or SimpleFX to trade equities, commodities, Bitcoin, and a handful of cryptos with a fantastic first-time deposit bonus. All that information only available with our link. Then you can message Lee in the Telegram. He'll get you in our Discord. It is free. You can come be with a fantastic community. And we've taken a lot of trades, guys. I shorted here on the S&P. We traded this in the room, and then I longed the S&P as well back down here on the CPI report here on the 1 hour time frame. 44.59, we longed this breakout, and now we got the pump back up, hit my stop loss out of here. I got out at 45.15 over here. So I'm looking for the next trade, and right now, we'll get to that. But right now, it looks like it potentially could be building a double top on the smaller time frames. Key resistance here on the daily is 45.26 based on my projection here. So I'm watching 45.26, and if I want to look higher, I have confluence here and several Fibonacci projections and forecast at 45.44 is my next key level of resistance. Want to see what price does here because right now we're trying to retest the exact same area we fell from. So that's a key area to watch, 45.26, and then above it 45.44. And if it starts to break down, then you can go lower. And right now, like I said, if you just pull this pull a simple fib retracement here, you literally hit 45.23, the 786 to the dollar. So I want to see if this holds up and this starts to roll over. I expect some volatility here with earnings. I do expect a hawkish Fed. That's Powell on our thumbnail. I expect a hawkish Fed. Because they can't be happy about the market conditions. They can't be happy about PCE being stubborn. And again, guys, the print for the inflation, this could be the low print for the rest of the year. If inflation trending the way it is, the base effect's going to change because the big numbers dropped off. So we could see a slight increase next month. You could see a slight decrease, but Powell knows this. They have the projections. This is also why they're forecasting a recession. They know this, okay? They know that there's a potential for inflation to pick back up, especially if commodity prices take off like oil and natural gas. So we'll have to wait and see how they play it. But I expect the Fed to be hawkish. I expect that quarter-point basis hike because it's priced into the market, 92% chance you're getting that. And then we have to see what he says at his speech. What is the bullish case for Bitcoin? Do I think this is going to happen, and what is the bullish case? Well, I've been showing you this chart for a couple of weeks now based on the market symmetry of the 63% pump, 20% declines, roughly a 60% pump. This takes you up the geometric mean to the 2618 at 3970, 791. This is the bullish case. But if the equity markets top out and roll down, remember Bitcoin lagged on this pump back up here to the 1618. If the equity markets start to roll over or show weakness after earnings, you can look to see if Bitcoin's going to start to fail as well. A little trick they play on earnings. So the analysts, I saw this, I think, on Yahoo on Friday. I think the consensus was earnings to be down 7-8%. And then some analysts lowered it to 9% on Friday. They do that so you can have a beat rate. If you guys watch business news at all, if you subject yourself to that, and they say, wow, Bob, 70% of the companies have beat. This is better than feared, better than feared. They lower their earnings to a level that they're easier to beat. The beat rate is always high. And then they say, oh, we'll have to raise it for next quarter. So we have lower earnings projected this quarter than last quarter. We're in an earnings recession. You hear Mike Wilson talk about that from Morgan Stanley. But it's interesting to see how the market reacts because the market's not trading on fundamentals. The market's trading at a 19 PE, almost 20 PE. What's the recessionary PE? 12 to 14. Big move down you can have in the marketplace to come down to that PE. So you have to keep the money in the market, and they know this. You have to have your money. This is how you get rug pulled as retail, rug pulled as being a passive investor, is that they keep your money in the market, and then when the market flips after the rally dies, you're stuck in the market because you can't make any gains, Bob, unless you're invested in the marketplace. Just remember the people that you follow on TV that are money managers, they're trading your money. And the second thing to remember is that 84% of them over a 10-year period cannot beat the S&P. Your grandmother passively buying the S&P over a 10-year period will beat 84%. 84% of the professional money managers you see on TV. That number goes up to 93%, by the way. Those numbers, it's a survey that's done. They're all over Google. You guys can read them. I'm not making them up. 93% over 20 years can't beat the S&P, but people want to follow these people's advice, and they don't make you as much money if you just passively invest at your own money. And of course, I prefer using TA to try to pick tops and bottoms as best I can to get the best location in the marketplace. But I digress. I'm ranting here today, guys. We haven't done a video in a few days. So let's look at this. So Bitcoin dropping a little bit as we're talking, 29,938. Again, this is the bullish case. I like that it held the key retracement level. I like the symmetry in the market. It doesn't have to do this move, but I just want you to be aware of this. What we did in our Discord, by the way, one of our traders, Mark, he shorted up here, posted the trade. We caught this nice 20% drop. I posted the re-entry short up here for this double top that was made. That was a 17% drop. And then Mark posted the long down here at the 25.2 range. And this is a trade that I took and a lot of other members took. And this was a nice 30% increase in the price of Bitcoin. Okay. If you go from the bottom to the top, 28.5%, close enough. What's a 1.5% between friends? Now I got stopped out on this pump up and then come back down. So I'm waiting for another trade. I'm waiting to either short this or trade the breakout. The levels haven't changed in the videos I've been making you guys. As you can see, we basically only had 2 candles close above 30,823 since like June 21st. So you're in a really, really tight range with your base here. Your base here at 29,797. 30,823 is a 1618 fib, completing that harmonic ratio. As you can see, that's where we got hit and rejected for that short. And then we've got as high as just above 31,527. If I was going to trade any breakout, it would have to be above 31,527 on a bullish pattern, preferably a higher low type structure that breaks out, has some compressed volatility and shoots up, okay? Because until then, you're in this range and this can break either way. You can zoom in the smaller time frames, of course. Let's look at gold. We haven't done gold in a week. All right, gold. So the sine wave has been playing out beautifully here in a harmonic pattern for gold. Your top, your base. You guys know we shorted gold up here above 2055. We talked about it for weeks before we did it. Talked about it here on YouTube as well. And we had this nice retracement, whatever that is, an 8% move or so. And now we have this bounce back up. Lots of people like gold. I get that. Lots of people like gold. I own physical gold. And they want to know what's the bullish case. I'm going to show you guys that in a second. But what I think is the most likely case is this simple fib retracement. I'm watching for gold to try to come up to 2000 or 2029. If we add some fibs to this, let's add the 486 and let's add the 382. You were just hitting the 382 at 1959, got rejected. So you have a soft little rebound. Remember, I'm looking for this pattern to play back out in a larger frame here. Had our pump above 2055, which would be shorted. Then you have your sell-off, your sharp rebound, and your breakdown. We didn't get that pattern to play out this time. We had the pump, we got the short, posted that trade, but we had our earlier double top form here, and then we just had a sharp decline here on the way down. So I'm hoping this comes back up to give us a more tradable, another entry here on gold. But that's the bearish case. You look at your MFI, you're at the median line. If this thing breaks out, you could have some more upside. If we look at the bullish case for gold, what's the bullish case? Well, the bullish case, I would have gold going to 2171. I don't have anything suggesting that at the moment, guys. This is Fibonacci projections that I'm looking at, but that would be my bullish case. Really keen on that 1618 ratio lining up for my BCD. So this is something that I'm interested in here, and we'll see if gold can do this. I don't think it will personally. It's going to sell off when the markets sell off, but if the markets continue to rally, you could see gold push up some more, but you may be getting close to your rebound exhaustion here. Let's see how that's affecting silver. Silver, same premise, guys. You know, you can look at TA, you can build a base case, you can build a bias one way or the other, but what you're doing here on silver is you're holding nice retracement levels as you move up. Hit your 618, price moves up off your first drive. You get your second drive. Let's see where this went to. We take our second drive here. Whoops. Take our second drive and bring this up to the top. Bounced once again off your 618. So again, you have symmetry in the metals for these to move, and you're rebounding up towards that 786 at 25 spot 27, okay? Want to watch that 25 spot 27, and you have this nice double bottom pattern here, triangle wave that formed, and this would give you this type of retracement as well if it did complete this. Your retracement again would be right around that 786 level on this triangle wave if this is to come up here and make some resistance. And if that happens, guys, then you're just always looking at your shapes. You're making a larger style double top once again, or a larger double top. Just depends how you want to draw things, but those are the key levels I'd watch. Watch that 25, 27, watch your support there at 24 spot 59. Silver and gold are fun to trade. They're fun to own, but unfortunately, I think you're repeating the GFC cycle. Well, the metals will go down with the equities and recover faster, which, you know, is a good thing at the end of the day. Looking at the NASDAQ, guys, you have bearish divergence on the paper in the market, the money flow. You have bearish divergence. You can see you made your high here on the MFI, and then you had price continue to rise as your oscillator showed you money was leaving the market. You have momentum divergence as well on this swing. We hit our key targets, looking at my Fibonacci, my wave projections as well. We had our 1618 here. Nice cluster, a little bit of a retracement, pumped up to the 2618. Nice retracement here. And now we formed another triangle pattern, an X5 pattern for a triangle wave. And looking at where this price is going now, can take a quick projection of this as well to where this could get to or where it got to. 1618, 15645, you're $15 above it. So you have an expansion here from your AB. So this is what I'm looking at here, seeing if this holds up and you start getting a topping action. You had a lot of supply dumped on that previous daily candle from Friday, as you can see, and we're retracing some of that dump. So we'll see if this holds up for the rest of the week, but this is a keen area to watch, 15,645. And let's go ahead and look at the Russell real quick. So the Russell as well. Russell, we had a nice breakout on top of Wyckoff, had a failed pivot, and then a retest of a pivot, and then a breakout. Let's see where this goes. So let's do some Fibonacci projections here. We had our 1618 beautifully for these nice retracement levels. This looks like we need to add some fibs. We needed 2618. That's at 2013. And I bet you if we add Kepler's triangle at 2.058, yeah, that's where our hit currently is. So you have the Russell between fibs trying to hold above 1946. It's at 1957 right now. 2618 at 2013, which puts you back in this top range for the Russell. That's the high essentially from August 2022. We'll see if the Russell can do that. Let's look at some of the indicators here. You're approaching overbought. Russell doesn't get overbought very often, as you can see. So that's the highest level you've been on the MFI in some time, going back all the way through April here, just on my screen. Momentum is lower. You have a swing up. I would see what this does here. We have regional banks and stuff reporting. Most of those are in the Russell. They're probably going to be weak. So again, this is just some flux here in the marketplace, but nice move on the Russell today. JPN, looking at the NIC. This is this had a nice confirmation here at our 2618, 33,633, came down, formed your double top. You got your double top pattern here, broke down, trying to hold support right at the base of Wyckoff, 32,000. You see that? So you have your high, your lower high, and your new lower high. See if you can hold this base. See if the oscillators can reset, give us a little bit of upward momentum. You're below the median line on the MFI paper leaving the market. Maybe you try to put a double bottom in here. Momentum was clearly down. It's pretty much flat now, and the NIC is really just pretty much flat. So we'll see what this does, but what I would be interested in is trading at resistance again. If this does come back up and we start to retest 33,633, watching how the behavior of it when it gets here, looking at the volume, looking at the money flow, may be an interesting area, because if you pivot out, you can go up. And obviously, if you fail, you can have a nice drop. And this drop went all the way down to 31.5-ish. So that's a nice potential trading opportunity. Let's look at Tesla real quick. Tesla, again, we had our fib projection here that we've been going over. I guess with those unit deliveries being higher, you had Tesla had a nice spike up. It's at 286.66 now. Again, this was a trading opportunity here. We shorted Tesla here. This was a 27% drop, and Tesla fell here $25, $30, 268 to the 230s. So those are some trading opportunities. Looking at the fibs here, I have 299 for the 1272. Let me update a projection here. If we do another updated projection, get an expansion here, and we hit 289. You see that, the 1618 beautifully. Okay, we got a knife above it and back below it. This price went all the way up to 292. So I'd want to see how Tesla behaves here at 289, key resistance area, hence the retracement from it. 289, 299 is your upside window of resistance I'm looking at. And we'll see what ends up happening with Tesla and earnings. So let's jump over to the DAX. DAX has been very much in Wyckoff, very much sideways, bounced off the 486 for support, 15,464. And let's just look at this. Let's just do a simple fib retracement. Where are you at? You're above the 618 at 16,000 and the 786, 16,200. Very narrowly confined here, but watch this topping structure between these two fibs. If you start to come back down, you have your high, your series of lower highs for potentially a double top, and then the arm coming down back here, and you may be retesting 15,464. We'll see how that plays out. Not very interested in doing anything here on the DAX. And of course, you want to come up here, break out of this range, and pivot out to the upside. But, you know, again, that's a big, big ask, especially with Germany's economy the way that it is. Looking at the French 40, very clear triple top. The French 40 can be fun to trade. 618, 73.88. You've hit this now 3 times. If you can hold this support, let's see what that support is at. If you can hold this support, you hit the 382 and come back up. The shape that I would be looking for, you have the money flow up here on this move, you have momentum switch back around. The shape I would be looking for is a return to a lower high for a double top type structure. So if we pull this fib down, I'm getting a lot of fibs on here, I can see. But let's go ahead and move this up. 618 at 73.56, 786 at 73.79. That's what I would be looking for to see if either of these hold. So you have that type of movement, okay? A double top movement for a further breakdown to at least retest these lows down here in the 7,000 range. And you're at 7,300. So if you go from 73.56 back down to 7,000, could be a very nice trade. For obviously to break this double top, you got to get on top of 73.88 and pivot out to the upside. And then you're looking at 74.80, 7,500 for your targets. All right, guys, that completes the show today, 25 minutes. Hope you guys enjoyed it, and I will talk to you guys next video. Have a great week, everybody.